key messages is that Swiss onshore market in wealth management is highly competitive, but the good news is there is still assets under management growing, so it's a growing market regarding assets under management. The pressure on margins is high, so we see decreasing margins in this business onshore. The good news is you can position yourself with a clear value proposition in the Swiss onshore market. I'm talking about Swiss domiciled clients. So with our positioning in the market, we clearly focus on entrepreneurs, executive and wealthy families where wealth is created in Switzerland.
So basically we see that there is three phenomena that we have described this morning, which was first an increased appetite for sophisticated products from clients. This is certainly linked to the market configuration that we've been witnessing this year. The second is a clear bias toward ESG solutions, which were more and more interesting for private clients. It used to come from the institutional universe, but now today we see that we are really challenged by private clients on the kind of solution that we can offer. And of course, which is a recurring topic that we will be discussing all the day, which is what we call digitization, meaning the smart combination between physical contact, human contact, and digital technology.
So we see a number of catalysts right now coming together. Not only do we have the market forces, which of course are creating a lot of instability, and that makes clients who were happy with their performance start to question whether or not the private banks are providing the right service for the performance fees they're paying. In addition, we're coming off of COVID, which actually still has been a catalyst for accessibility. Clients who used to be okay with Swiss bankers being available 9 to 5, no longer okay with clients only being bankers only servicing 9 to 5. And the third thing is, and what we forget, we've been talking about next gen for some time, sort of 30 trillion shifting millennials into the hands of the next gen. It's actually happening now. In 2023, there'll be more adults in Generation Z, which is the Zoomer generation, than there are children.
That is important in being optimized in service for the client, in the sense that we are all employed by the client, and to understand finally the client better than he knows himself, as I have outlined in my presentation on behavioral finance biases, which is the problem of diversification. Don't invest in something you don't know and which has no focus, which is fear of missing out, the temptation of investing into trends, so help staying diversified, and the number of choice. The problem of enormous choice in the capital markets, and the added value here is to reduce the number of choices by knowledge, good setup in the bank, good teamwork for the client.
The key message is, first of all, ESG is really a huge topic for private banking clients, one of the most important ones currently, and the trend is positive. Secondly, really believe that technology is able to help advisors to provide a better job, to better advise their clients. And thirdly, and that was also part of the panel discussion afterwards, I think it's crucial to invest into education of people, of advisors, first when it comes to the topic itself, ESG, but also when it comes to new technologies, comes along with cultural change in companies.
The client decides how he wants to get advice and how he wants to be provided with information, and the bank needs to be able to react to those client requirements in an appropriate and in a timely way.
I think that we could have an interesting 2023 years. The main challenge will be to continue to tackle the main issue that we have addressed this morning, and I think that innovation will be really key to address the challenges that we will be facing, be it from an investment standpoint or ESG or also technology.
I see a further concentration in the market. So, as I mentioned, 92 banks, and the number of banks will decrease. The margin pressure will accelerate, and with a clear positioning, there will be still growth in terms of assets under management.
I think even though we can observe that private banking revenues are more stable than the revenues of other segments of banking, even though I think that banks will focus on costs very much in the next 12 to 18 months. And that can be really a differentiator for companies that don't do that, but invest in technology.
So someone was saying to me recently, now for technology and using wealth tech to enable these improved client and advisor collaboration, it's not about if we have availability, it's about choice. Because actually in Switzerland in particular, there is a lot of choice. What Switzerland now has the ability to also leapfrog, a bit like Asia back in the day of mobile, into SaaS solutions as well. We see, thanks to the investment both with FINMA and regulators, but also in terms of investment locally with Microsoft Azure and other companies, the leap to SaaS. And we see as InvestCloud a huge adoption now for SaaS solutions to really leapfrog and make sure that every dollar you spend in technology, you're not spending that in technology debt, you're looking at the future and you're ensuring that you're future-proofing that technology spend as well.
The industry will develop their services into a more efficient and more industrialized setting, while still keeping the personal, individual part of it.
I think the opportunity for Swiss banking in Switzerland is fantastic, because it's all about the people. To get the right people on board is crucial to do the right service for the client, as we are all employed by the client. And the quality of the people is enormous on this very condensed space here in Switzerland, in particular in Zurich and Geneva.
But I think that it was, we are just at the beginning of the day, but I think that it was really stimulating. A lot of people, a good spirit, I don't know if it's because we are a little bit out of the center of Zurich, but the fact of being here in this nice place, I think that people were able to extract a little bit from the day-to-day work and the day-to-day concern and take a little step forward to be able to think to this global issue.
Besides a great organization as always, I think it's a great event where people from private banking, from the tech side, from banks, come together and have really a nice and fruitful dialogue. So really enjoy this here.
Yeah, I love it very much, and it's very inspiring to see all the peers and also the industry and have the exchange and see the innovations going on. So I like it very much, and perfect location. Thanks for inviting us.
The Dolder is the most amazing place in all of Zurich. Switzerland has really been a hotbed for wealth management, obviously, and where a lot of best practices come from. But we also see now the combination of technology and innovation coming together with private banking.
Well, as you said, it's a wonderful place to meet and to discuss all those subjects, and there's a very wide audience here. From banks to investment managers to providers coming together and discussing the questions that are key for the future of the industry.
The private banking conference in the Dolder today, 2022, is a fantastic example for this, because here on a very small space in a very condensed day, we have so many specials of all kind which do know so many different kind of topics which can make client service even better and stronger, which is again a great example of Switzerland and Swiss banking.